Hello and welcome to the Personal Finance Show. I'm Jane Constantinis. Day in, day out, it's hard to escape hearing about the economic downturn. But how many of us are confident about managing our finances if the worst should happen, if we were to lose our job or become too ill to work? Well, Bright Grey have done some research which revealed that more than 1 in 10 people are cutting back on insurance policies. So, have we got our priorities right? What should we really be thinking about when we're looking for ways to cut back? Well, joining me today to discuss this and more is financial commentator Edmund Tirbutt and insurance expert Roger Edwards. Welcome to the show. Thanks for coming in to talk to us. And of course we're live, so if you've got a question for our guests, type it in the box on the screen, send it to us with your name of course, and we'll get through as many as we can during the course of the show. Roger, 1 in 10 people cutting back on insurance policies. Understandable, I suppose, in these difficult times.
Yes, well, we're in a credit crunch, and at the moment people are faced with increasing food prices, increasing fuel prices, increasing petrol prices, and they're having to cut back. And unfortunately they're looking at their bank statements, they're seeing insurance policies on those bank statements and thinking that's something we can stop paying into. And what we're wanting to say is, please just hold on a second and have a think about it before you do so.
Edmund, as an independent commentator, what's your view on what people's priorities should be in these difficult times?
Well, you've got to sit down and you've got to work out what you can actually afford to be without. You can probably afford to be without a latte on the way to work. If you're a caffeine addict, you can always have it at home before you leave. A lot of people can't afford to be without life cover for their dependents, and they can't afford to be without critical illness cover if they go seriously ill. I mean, about 1 in 4 men and 1 in 5 women are going to get a critical illness before the age of 65. And you've got to prioritise. If you try and cancel these covers now and think, well, I can take them out at a later date, the problem is they're going to cost a lot more because you're going to be older. And also, if your health deteriorates in the meantime, they're going to cost you a lot more still because you're going to get premium loadings. So I think there are a lot of things that we take for granted now. We think that we can go out for a meal whenever we want to, we can go to the pub and buy a round of drinks whenever we want to, we can drive 100 miles to see a friend for lunch whenever we want to. And I think people have got to start questioning whether these are things we can do whenever we want to, or whether they're things we've got to actually save up for and treat as a bit of a luxury rather than just an everyday occurrence.
I suppose part of the problem is that this forces people to think about difficult issues like illness and potential redundancy. And we don't want to think about those things.
No, that's right. And let's be honest, we don't hope these things aren't going to happen to us, but I think you have to sit back and think about what happens if. And the whole of your lifestyle, your bills, your mortgage, your day-to-day living depends upon the income that you earn. And you need to sit down and think, what happens if my income stops? And what could it be that stops my income? It could be unemployment, it could be sickness, and in the worst case scenario, it could be a premature death. And you need to ask yourself, what would happen to the family, what would happen to our finances if the salary stopped coming in? And worst case scenario is it could be that you might lose your home, you might have to downgrade your lifestyle. Making sure that your insurance policy is still in place means that if that eventually happens, you've got that financial security. So when you're sitting there trying to find a way of cutting back on your expenditure today and you think the insurance policy is the thing to go for, you really need to have a think about the possible future consequences of making that decision now.
Okay, let's go to the kitchen table, the family sitting around, head in hands, looking at the bank statement. What can they do? Because people do have to cut back, and they do, why are we saying they? We do have to save money.
Yeah, I think at the moment, we're a society for the last 2 decades that have become used to luxuries. And if you look at your everyday expenditure, you may, as Edmund said, you may pop into a high street coffee shop on the way to work every morning, spend a couple of pounds on a latte. You might get a carry-out meal once a week, or you may go out for a meal once a week. You may go to the cinema a couple of times a week. And we've become used to these luxuries. If you were to add up the cost of all of those luxuries over the course of a month, you'd be probably spending £200 or £300 on that. Now, even if you were to cut back 10% of that, £20, £30, and make sure that that is what can fund the life and health policy, then if the worst happens at least you've got that financial security of a lump sum or a replacement income, and of course you can carry on paying the other 90% of the luxuries that you've become accustomed to in the first place.
So we're using this word luxury quite a lot, aren't we? Do you see these kind of insurance policies as a luxury or a necessity?
I think it depends on the individual circumstances. I think for some people they are a necessity, yes. If somebody doesn't have any dependents, for example, there may well be no need for them to have any life cover, but they could still need to have critical illness cover, or they might want to have income protection to give them an income if they go ill, because they've still got to take care of themselves. So it's all on a horses basis. But I would say if you're going to try and cut back on insurance, there are probably other insurances that could go first. Research shows that over 50% of single people are actually insuring their mobile phones before they insure their health, which I just find amazing. And over 25% of families are insuring their central heating before they insure their health, which I find extraordinary. I mean, why not just have a spare radiator in the cupboard which you pull out and put on? You're still going to be able to live and carry on. It might be a little bit uncomfortable for a bit until you've got the cash to fix it. So it's all about establishing your priorities, and I think that it's going to be a gradual change, and we've been going on like this for 2 or 3 decades now, taking things for granted. I can't remember the last time when I mean, just virtually everything I have, I just feel it's something I deserve and I'm going to have it, and I've never really had to make hard decisions about prioritising expenditure. And you know, I'm working, I'm reasonably successful, even I'm having to sit down with my wife and we're having to look at what we're spending our money on. In fact, research by Bright Grey is showing that 2/3 of people are having to cut back on something now. So we were doing this the other evening, we were paying a tiny £90 a year for the local tennis club, which is incredibly good value. But then we thought, well, when did we actually last play tennis, even though it's 100 yards away? We haven't had time, we've been too busy. We, in fact, didn't cut back on it, but I'm sure we would do before we cut back on health insurance.
And we're not being killjoys, of course. We don't want people to stop doing everything that they enjoy and stop buying things that they like. What we're just saying is, let's prioritise so that a little bit of money that we usually spend on luxuries is just put aside for the insurance that will allow us to continue to do what we like in the future.
And what about, okay, cutting out the latte on the way to work is one thing, but what about actually looking at the policies that you have in place and making sure that you've got the right policy, perhaps switching to a more cost-effective plan? How do people go about doing that?
Well, the best way is to go and see an independent financial advisor, for sure, because they can give you an independent view and take a view of your overall financial planning. They can review what you're spending on life and health insurance in the context of other expenditure on other things, including your savings, etc. And they can also give you an independent view on which are the best health insurers and which are the best life insurers. So it's not just who is the cheapest, I may add, because there are a lot of bells and whistles that can be very valuable on some of these policies, and it's also very important to get an insurer who's going to pay out at the claim stage, and some are better at doing that than others. The majority, in fact all of those that any decent IFA would recommend, you will have no problem in having an honest claims payment. But when you hear about these horror stories that occur, it's invariably somebody who hasn't gone through an IFA and they've gone direct to the insurer, and they tend to have a slightly different way of doing business. And
for people who don't know where to find a good independent financial advisor, where do they begin? Sure. They go online to www.unbiased.co.uk. They type in their postcode and then they ask for personal protection, and they will get a list of IFAs in their area who can advise on protection. And if they want to go a stage further and get a real expert, they can actually ask for IFAs who've got specialist qualifications in protection. So it's a pretty good way of getting competent people. Great.
And what an IFA would also say to you as well is that there's a perception amongst the public that this sort of insurance is expensive. But actually, the price of this sort of cover has been coming down over the last decade, and in fact life insurance and income protection these days is probably cheaper than it's ever been. And a couple into their late 30s and early 40s can still get about £250,000 of cover for between £10 and £15 a month, and that's not a great deal of money for such a huge sum of protection. Yeah. We're getting lots of questions in. Let's just have a look at one from Liz Proctor. She works in banking, and given that she hasn't been here for long, she's worried about her job, security, trying to find ways to curb spending, doesn't have contents insurance, but does have a critical illness cover on her flat. She says, I'm young and healthy, maybe this should go. One of the things about life and health insurance is that it's good to take it out when you're young and healthy, because obviously the premium will be cheap. And again, you could sit back and think, I could save £20 or £30 a month by stopping this cover. But you also need to think about what happens when you're a little bit older and possibly when your health isn't as good. If you stop the cover today and then want to take it out again later on, and you're older and possibly your health isn't as good, then the premium that you would pay in the future will be a lot higher than it is going to be today. So again, if you can find some way of continuing to be able to afford what you've got today by making a few cutbacks elsewhere, then ideally, you know, you should probably keep that cover in place. Again, an independent financial advisor would be able to give you other options if you needed them, in terms of maybe swapping to a cheaper policy or one that offered different options. But if it's possible, I think ideally you should keep that policy going. As for contents insurance, again, you need to weigh up the priorities. What have you got in the house that's important to you, that needs to be insured, that you could lose in a fire or a flood or something like that? So again, it's about priorities, and if it's a very important priority for you, then you can make the economies somewhere to enable you to continue to pay the premiums.
But it's easy to see why people are doing the business of looking at the bank statement and just identifying those lump sums. It's easy, isn't it, to put a pen through them, rather than the, well, how much a month are we spending on gym membership, and or you know, even not such luxuries as gym membership, but you know, lunches out and so on. And in fact, Hazel, again, it's a sort of priority question. She's taken holiday insurance out every year, not once had an accident. Over the years, probably spent more on it than on the holidays themselves. Does she really need it?
The answer is I wouldn't go on holiday anywhere without it. I mean, what really matters with the travel insurance is the health cover on it. I don't think I wouldn't be too bothered at all about whether I had baggage cover, whatever, because I wouldn't be carrying anything terribly valuable, I don't think. But if you go to certain countries, like, I mean, if you went to America without any health insurance, like travel insurance, you'd need your head examined, because you could literally lose your shirt. I mean, if you had an operation in America, by the time you come back, you'd have to sell your house to pay the bill. There's absolutely no doubt about that. So it's something, I mean, my aunt actually had an accident. She was in somewhere like Cyprus in a hotel. She broke her hip in the swimming pool, and she had to be flown back on a plane. They had to turn the last 6 seats of the plane to allow her to be on a stretcher, etc., etc. Well, she had the cover, but there would have been a huge family bill if she hadn't. And I would, if I had a choice between going on holiday without travel insurance and not going on holiday, I just wouldn't go on holiday at all, apart from if it was in the UK, when I think you're reasonably safe.
Yeah, okay, well, that's an unequivocal answer. Paulina has sent us a question. As a family, we're struggling at the moment, like many others. Our budget is such that we can't afford both house and life insurance. We think house insurance is a priority. Your advice?
Again, I think buildings insurance is very important. The contents, you need to have a look at what's valuable. Is it possible to replace a television set or something like that? If it unfortunately got stolen, could you afford to replace something that costs a couple of £100s? Then you've got to ask yourself, how much would it cost to replace your salary? And if the cost of that is £10 or £20 a month for a life assurance policy, then again you can see how valuable that can be. So again, you need to weigh up those decisions and the value of the thing that you're insuring. Again, I think it's very important in circumstances like this to talk to an independent financial advisor who can say, well, this inanimate object, the television set, is going to cost £300 to replace. Yourself and the salary earning potential that you have over the rest of your working life could be several £100,000 worth of salary. What happens if that stops? It's easy to replace the television, it's a lot harder to replace you.
Because it's such an emotive subject, all this business about what if I become ill, or what if it's a premature death and so on, it's almost like we need to divorce ourselves from the emotion and almost do a little sort of personal balance sheet, don't we, about it's a what if question, isn't it?
It's
that
almost
we need to
like
keep asking.
a family, as you've already said, sitting around the kitchen table. It almost becomes a kitchen boardroom table, and you're almost having a family annual general meeting where you're making these little finance decisions. What's important to us? What can we cut back on? What's absolutely non-negotiable? We don't want to cut the gym membership because we really like going to the gym. Fine, let's keep paying that, but cutting back on something else in order to allow us going forward to make sure that we're fully protected.
And do you think, I mean, just widening it a little bit, this business of the last 20 years, say, that we've all become rather lazy about budgeting because we've just believed we can have anything whenever we want it, and most of us have. This is almost getting back to a different era, isn't it, when people did do that. What can we as a family afford?
Yes. I mean, when you're trying to give somebody a Christmas present nowadays, it's impossible to think of something they haven't got. Absolutely impossible. Everybody's got everything, so you end up giving them, you know, another gift voucher or something so they can go and choose their own. But, I mean, I'm not sure it's going to do too much harm if we have to go back to the days when somebody actually gets something they want for Christmas. That's the sort of prioritising.
Maybe we should be giving them a life insurance policy.
Yeah, well, I think that wouldn't be a bad way. If you could, that might be a good commercial way. If you could come out with a way that somebody could do that in a way that, I mean, obviously they can't do it because the person's got to fill in the application form, but as a sort of a kind of this can only be used to take out an insurance policy subject to underwriting, that might be quite a good commercial move. In my opinion,
would be very disappointed.
No, I'm thinking that too.
Well, some people now are giving them, you know, they're giving their grandchildren, they're putting it in stakeholder pensions and things for something when they get older, so it's not a bad idea.
Yeah.
You know, particularly if you could do a lump sum one,
absolutely,
whereby somebody could pay a few £1,000s up front, and that would cover their child until a certain age. That would be quite a nice present.
But then again, it's an interesting comparison because you will spend £50 on the latest toy for your son, or £200 for the latest games console, and that's worth a couple of £100 plus the value of the games. Again, £20 a month, £250,000 worth of life cover, or £50,000–60,000 worth of critical illness cover. In real terms, that's great.
That's a bigger present for your child than it is that game. And of course, this is going to become especially relevant as we approach Christmas, and families are going to be making those sorts of decisions about what size of gift is little Freddie going to have this year.
Well, they've got to be brave, and they've got to stand out and do what's right for a change instead of doing what's easy. I remember when I was at school, we had the son of the governor of the Bank of England there, and he refused to allow his children to have a television because he felt it wasn't good for them, because they ought to be playing chess and doing bridge and that sort of thing, and they became very intelligent, successful people as a result, but I'm sure that they weren't terribly happy about it. We used to think it was a little bit odd, so why should you have to give your children what everybody else does?
Final, slightly frivolous, not that it's a frivolous subject at all, but Demelza has made a comment. She never takes out insurance on TVs, but got her cats insured, which she knows is a luxury, but they make her happy. Well, she's prioritised, hasn't she? It doesn't matter if the TV goes out the window, literally, but
well,
the
I think that's a very sensible priority, because you've got an emotional attachment to your cat. But I'm not sure that I have one to my TV, particularly. If my TV breaks down, I chuck it away and I get another one. I don't sort of go to the funeral.
But in the same way as you've got an emotional attachment to a cat or a dog, you should also have an emotional attachment to your family if you've got one. And showing that emotional attachment again is making sure that you're financially protected going forward. And the reality is, of pet insurance, you are insuring against the financial costs of having to pay the vet's bills and the treatment that the cat might need. In
which can be huge.
ways, what you're doing for yourself.
We all need to be a bit more sensible, and we don't like that word, do we? Because we haven't had to be in the last 2 decades. Just tell me very briefly, because we're nearly out of time, about the calculator that you've got on your website. Oh,
that's right. On the Bright Grey website, we've got this idea of how can you cut back a little bit on your expenditures for luxuries, and we've got this calculator where you go in and you say, how many coffees am I buying a week? How many bottles of wine? How many carry-outs? How many meals out, cinema trips, and you know how it's amazing how much it adds up to, several £100s a month. Just try it, go in there, type in these expenditures, and then just say, what could I do with 10% of that? I could really protect my family, and then I'd be able to afford the rest of it, and I'd be fine if the wrong thing happened.
Can we take wine out of the equation? Is there a special?
Fine.
Is wine right? Okay. Thanks very much. Thank you very much. Really sensible and useful advice, and I think we just all need to think a little bit more carefully about our priorities, don't we? Thank you. Very interesting. Thank you for watching, and brightgrey.com is the website to go to for that calculator if you're interested in doing that. Thanks for watching. See you again soon. Bye-bye.